Welcome back to the Construction Accountant's Toolbox. I'm Susan Marinaccio, construction financial strategist and author of The Construction Accountant's Toolbox. This is the Construction Accounting Academy, Module 2, Construction KP is Made Simple. This is Lesson 2, Build Your Weekly Construction KPI Dashboard. In the last lesson, you learned what KPIs are, why controllers use them, and what the 3 most important construction KPIs tell you. You also saw a preview of the dashboard you're about to build. Today, you'll learn exactly how to build that dashboard yourself. Let's start with today's objectives. By the end of this lesson, you'll understand what data belongs on your dashboard, where to find that data in your accounting system, the exact columns to include, how to build a working version in Excel, and how to use it to drive action in your weekly project meetings. First, a quick recap. You learned 3 KPIs in Lesson 1. Budget versus actual answers. Are we spending what we planned? Cost Performance Index or CPI answers. Are we getting the work done for the money we've spent? And cash flow answers. Can we pay for next month? Your dashboard combines all 3 into one page so you can see which jobs need attention. Here's the dashboard structure. 1 page. Every active job as a row. 4 columns. Budget versus actual, CPI, cash position, and the most important one, action. Because controllers don't just read reports, they take action. Look at this example. Riverside is under budget with a CPI of 1.08. Stay the course. Coastal is slightly over budget, but CPI is strong. Just monitor. Palm Avenue looks on budget, but CPI of 0.97 tells you otherwise, and the retainage is tight. Action. Meet with the PM. That's what a dashboard does. It takes 5 minutes to read, and every row ends in a decision. So what information belongs on your dashboard? You need 2 types of information. First, the essential raw data you pull from your job cost report, contract value, your estimated total cost, costs to date, and the verified % complete from the field. Everything else flows from those 4 numbers. The dashboard then calculates budget versus actual, what you spent versus what you budgeted, earned value, which we covered in Lesson 1, CPI, which tells you efficiency, and a status that tells you at a glance whether the job is healthy or needs attention. All of this comes from those 4 foundational data points. Here's where the data lives. Contract value lives in your project setup or bid management section. Estimated total cost is your budget or estimate that was set at project start. Costs to date come from your job cost report or aged labor and material reports. And % complete, the most critical piece, comes from the field. The PM or superintendent walks the job, measures the units in place, and verifies how much is actually done. This works in any accounting system. The data points are the same whether you're in Sage, QuickBooks, or any other software. Let's talk about the first column, budget versus actual. What it shows, are you spending what you planned to spend? The formula is actual cost minus estimated total cost divided by estimated total cost. Display it as a percentage, 2% under on budget or 3% over. This is the report everyone already runs and understands. But remember from Lesson 1, this number alone can fool you. A job can be on budget and still be losing money if you've only completed 28% of the work, but spent 40% of the money. That's why you need CPI to complete the picture. Now column 2, Cost Performance Index, or CPI. What it shows, are you getting the work done for the money spent? Here are 3 quick steps. First, earned value. That's % complete times contract value, the dollar value of the work in place. Second, actual cost, your total spend to date. Third, CPI is earned value divided by actual cost. Reading CPI is simple. Above 1.0, you're getting more work than you're paying for. That's good. Protect it. Exactly 1.0, you're right on plan. Below 1.0, you're paying more than the work is worth. Investigate. Keep CP is realistic. 1.05 to 1.10 is strong performance. If you see 1.25 or higher, check the data first. CPI is the heart of the dashboard. It connects what you spent to what you got for it. Remember from Lesson 1, A CPI below 1 doesn't mean panic. It means questions. Is labor running hot? Did material prices move? Is there an unapproved change order hiding in the costs? Find the cause while it's still $10,000, not at closeout when it's 50. Next, column 3, cash position. What it shows, can you actually pay for next month? Cash position is a simple 3-part status. Strong, retainage is low, you've been. Paid on most invoices, good cash position. Healthy, that's good progress, some retainage held, no immediate concerns. Or watch. Retainage is high, invoicing delayed, or cash is tight. Why does this matter? Here's the sentence I want you to remember. Profitable companies fail. Companies with cash don't. Profit lives on paper. Payroll comes out of the bank account. A job can be profitable on every page of your financials and still make you miss payroll if cash timing is broken. This column keeps you honest about whether you can actually pay people next week. Column 4. Action. This is the most important one. What it shows, what are you going to do about it? The action column is what separates a dashboard from a report. A report is something you read. A dashboard is something you act on. Look at the decisions in these examples. If everything looks good, stay the course. If CPI dips even slightly, that's a conversation with the PM now, while it's still $10,000, not $50 at closeout. If you're on budget but cash is tight, talk to your client about retainage or payment timing. Monitor isn't passive. It means don't ignore this. Keep watching. Be ready to act. This column is where the rubber meets the road. Controllers don't just read reports, they take action. How often should you update it? Weekly, every Monday morning if possible. Why weekly? Because costs come in all week, so by Friday or Monday you have the fullest picture. Because a problem discovered at week 6 is fixable, but the same problem discovered at week 52 is a write-off. Because it ties directly to your weekly job meetings with project managers, and because it becomes part of your rhythm. Not another manual task tacked onto an already full schedule. Weekly is the sweet spot. Make your dashboard visual. Use color to signal at a glance. Green. All clear. The job is on budget. CPI is strong. Cash is healthy. Yellow. Watch. One metric is off track and needs monitoring. Red. Alert. Multiple metrics are wrong and immediate action is required. Here's the best practice. Color the entire row, not just a single cell. If a job's CPI dips, the whole row turns yellow so it jumps out during your weekly meeting. Your eye can scan green, yellow, red much faster than reading numbers. Now let's build this in Excel. Start with this column structure. Column A is job name. Then the raw data columns, contract value, estimated total cost, costs to date, and percent complete verified in the field. Then the calculated columns, earned value, budget versus actual, CPI, cash position, and action. Here's a pro tip. Those raw data columns, contract value, estimate, costs, percent complete, those are your working columns. On your final dashboard view, you can hide them. Your public dashboard shows only job name, budget versus actual, CPI, cash position, and action. 1 page, 5 columns, clean and actionable. Here are the 3 formulas you need. Earned value, percent complete times contract value. Budget versus actual cost minus estimate, divided by estimate. CPI, earned value divided by actual cost. Copy these formulas down for every job row. Format budget versus actual as a percentage. Format CPI to 2 decimal places, 1.06, not 106%. Then add your conditional formatting. Green for good jobs, yellow for watch, red for alert. You now have a working dashboard. Here's how it becomes part of your workflow. Friday afternoon, pull your job cost report. Grab this week's costs to date and verify your percent complete from the field. Over the weekend or Monday morning, update your dashboard, plug in the numbers, and watch the colors change. Before your Monday meeting, take 5 minutes to review it and spot the jobs turning yellow or red. Then bring it to your weekly project manager meeting. 1 page, 5 columns, every decision is there. That conversation at the beginning of the week, when you can still do something about it, is exactly when you want to be having it. That's the power of this dashboard. Let's land this. 4 numbers drive everything: contract value, your estimate, costs to date, and verified % complete from the field. Your dashboard combines those into 5 simple columns you can read in seconds. Update it weekly. Friday, pull the job cost report. Monday morning, review it before your meetings. Use color to signal status at a glance: green, yellow, red. The action column is where decisions live, not just reports. And here's the encouraging part. This takes 30 minutes to build the first time in Excel and 5 minutes to update each week. That's the entire workflow. You're now ready to build this yourself. I'm Susan Marinaccio. Thanks for spending this time with me. Remember, you don't have to memorize construction accounting. You just have to understand how it works. I'll see you in the next lesson.